Okay, start the first one. So Akil runs a business providing home improvements on DIY. Akil pays the wages of employees by direct debit. So the source document, book of prime entry, debit, and credit. Well, source document is definitely going to be the bank statement because it's a direct debit. So that means that appears in your bank statement. Book of prime entry, or since to do with cash, goes in the cash book. Debit and the credit, well, one will be bank, one will be wages. Money's going out the bank, so that's the credit, and wages is an expense, so that's a debit. Okay, second one. Akil buys some equipment for £12,000. He depreciates it using the reducing balance method at 10% per annum. After 4 years, he sells it for £7,500. So we need a net book value after 4 years. So you can either do 10% each year and keep taking it away, or you could do 12,000 times 0.9 to the power 4, which should give us £7,873.20. He sells it for 7,500. Sorry, that was the net book value. He sells for that, which is less than net book value, so he's making a loss, and the difference is 373.20. Next one. Akil's accounting year ends May 2020. So that means it begins June 2019. He's put £700 income statement for insurance. However, included in this is an invoice for £240 for the 6 months ending 2020. So July 2020. So that begins 6 months. So July, June, May, April, March, February. So February 2020. So there's 2 months have been prepaid, June and July. So it's a prepayment of 2 months. So first of all, work out how much 1 month is. So 240 divided by 6 is £40 per month. 40 times 2 is £80 prepayment. So it shouldn't have, that £80 shouldn't have been paid this year. So you do £700, take away the 80, get 620 on the income statement, and then on the soft you would do that £80 would be other receivables because it's money we own. Yeah, we give that money too early. So if we ask for it back, that's money that's owed to us. Fourth one, Akil paid £100 for petrol by debiting vehicles, crediting cash. What's the name of this error? Well, if you paid for petrol, you should have debited the vehicle expenses. So crediting the cash is correct, but what it looks like at the minute, it's vehicles, it's been debited by 100, but how it should have looked, it should be vehicle expenses. So that means it's put in the wrong account of the wrong type. It's asset, expense, so it's principal, the error. Yeah, the worst kind. So to fix it, I need to put 100 there and 100 there. So I debit vehicle expenses by 100 and I credit vehicles by 100. You would write out the full names and just penalize it. And the last one, trade payable ratio, days ratio, sorry. So the formula is trade payables divided by credit purchases times 365. So that is 5,000 divided by 62,000 times 365. Type in your calculator and you get 57.03. So round it to the nearest day to get 57 days.